3 years ago, the 2022 bear market bottomed. And as year 4 of this bull market kicks off, investors want to know how much room we have to run. And that's what we're focusing on in today's Stocks in Translation. This first chart here is courtesy of Keith Lerner over at Truist, and is showing every third year of a bull market since 1957. Notice the far right. The current year, year 3, is the strongest of the bunch. So now we've got momentum, but how long do these bull markets typically last? Well, zooming out almost a century, here are the S&P 500 returns for all the 15 bull markets since 1932, including the current one. The bar at the far right is the average of the prior 14, which is almost double the current return of over 85% in the S&P 500. On average, bulls last about 5 years, 2 years longer than the current one. So at least according to history, this is not an old bull market just yet, and there's more theoretical room to run. Now let's see who did the heavy lifting. And for that, we're going to first turn to the S&P 500 sectors. This is going back 3 years, and you can see XLK here is up 139.5%. That is the leader. And if we take a look over the last 3 years, you can see a few hiccups and some sideways action here. And by the way, that's when NVIDIA was also going sideways, but it has really rocketed recently. Number 2, that's communication services. That has Alphabet, and it also has Meta. Then we have industrials, financials, each up more than 70. And then XLY is consumer discretionary, bunch of retail names with Amazon and Tesla at the lead. Now, if we drill this down to 1 year, you can see a little bit of red. But aside from materials, XLB there, all the red ones are defensive, so this is still bullish in nature. Number 1, that's communication services with 26.8%, and then tech, and then consumer discretionary. Those are the mega cap sectors, so there are concerns of concentration right now. Even number 4, XLU, that's utilities, up 15.6%. Well, that's kind of an AI derivative play right now. So let's check out the NASDAQ 100. And here we can see in the upper left there's good old NVIDIA, $4 trillion stock, up 40% over the last year. But I'm going to change that to a 3-year look where it rockets higher to 1,523% and change as we're talking here. Here's a quick chart, and you can see there's that sideways action that we were seeing in tech that also corresponded with NVIDIA taking a pause, but again, rocketing higher very recently. But guess what? Palantir up 2,150%, that tops it. And you can see this has just really rocketed up mostly over the last year. We had a lot of green on this chart and not a lot of red. So let me just skip over to some of our leaders, where in the upper left, when you take a look at some of these sentiment ETFs, GBTC, that's my Bitcoin proxy, up over 800% over these last 3 years. In second place, we got the chip stocks at 166%, then MEG 7 ETF, then ARK Innovation Fund, then we got software, the Qs, that's basically the NASDAQ 100, an internet ETF, and ITA. ITA is interesting because this was a really good defensive play when we had the post-Liberation Day sell-off. It didn't fall off as much as everyone else, and it's probably still a pretty good diversifier. So putting it all together, we got some good options here. We've had a lot of bullishness, but let's take a look at what to look for in the coming weeks and months as we head into the 4th year of this bull market. So as earnings from big tech come rolling in over the coming weeks, you want to pay attention to the AI leaders, which are currently priced for perfection, as the street says. Any misses, especially on future guidance, that could bite. Then we want to watch out for sector rotation on any pullbacks in tech. Rotation is the lifeblood of bull markets, as they say, and we want to see investors move into other areas besides tech to keep this bull market alive. Then you got to watch gold flows. According to the work of Todd Sohn at Strategas ETF Research, the 1-year flows in gold ETFs have just reached the same level in 2020 that occurred just as the price of gold was topping and starting to turn down. Now, history doesn't have to repeat, but gold ETF flows are red hot. And if the trend reverses, that could hit the price of the yellow metal as well. And now that Bitcoin is back to record highs, watch the crypto bid. Bitcoin is famous for reversing short term after hitting new highs, and a dip below 120,000 would be an orange flag for risk sentiment in general. Finally, meme stocks are surging, albeit for different reasons in 2021, But it's incredibly interesting that Roundhill just relaunched their meme ETF a few days ago. And when they first launched their meme ETF in late 2021, that essentially top ticked the initial pandemic bull market, and it was the start of the 2022 bear.